Thanks, everybody. Our first panel is on economics and public policy. I will very briefly introduce the panelists, and then we'll ask each of them to speak for 5 to 7 minutes. Then we'll have some discussion among the panelists, and then we'll open it up to Q&A. So let me do quick introductions, starting on our left. On our left, your right, is Nicholas Kristen. He's an assistant research professor of electrical and computer engineering at Carnegie Mellon University. He also has an appointment in the Engineering and Public Policy Department. He got his PhD in computer science from the University of Virginia. In the middle, Rainer Böhme, assistant professor of information systems at the University of Münster in Germany. He got his PhD in computer science from TU Dresden. And nearest to me, Sarah Mickeljohn is a PhD candidate in computer science and engineering at the University of California, San Diego, and she will soon be a faculty member at University College London. So I'll ask first Nicholas to make some introductory remarks.
Thank you very much for the introduction, and thank you for coming. I'm going to start this discussion by picking up a point that Joe made during his Bitcoin tutorial about Silk Road. And the reason why I'm starting from there is because Silk Road is actually very interesting beyond all the hype of people selling drugs online. And it's also something that I got interested in exactly for that reason. So when I started looking into it, it was mostly because I was thinking, well, it's interesting. It's apparently something that looks like a functioning marketplace using this mysterious currency called Bitcoin. And I was looking at this in 2011, so at that time, there weren't that many uses of Bitcoin. There was no Overstock, there was no, WordPress or anything like that. Essentially, it was the main marketplace that was trading in Bitcoins. And originally, what I wanted to do was to look at whether or not this was actually working, or if it was just, okay, yeah, there's a site which is selling drugs, but they're selling, $12 worth of pot per month. And what I found was, well, number one, yes, it did work. There was, everything was working fairly well. The transaction volumes were not ridiculously small. They were actually higher than what we had seen before in other online drug marketplaces. But perhaps what I found, which was a lot more interesting in my opinion, was that Silk Road didn't sell drugs at all. That's not what they were doing. Their sellers on the website were selling drugs. They were not. They were actually a financial institution. And this is because they essentially were doing several things. They were trying to mitigate risks that people were facing. First of all, they were trying to mitigate physical risk. If you are engaging in a transaction with a dealer, there's a good chance that you're going to get ripped off, beaten on the head with a pipe wrench, or other bad things may happen to you. If you move to an online type of transaction, you don't meet the person physically, so you're reducing the risk of physical harm. But more interestingly, perhaps, in terms of talking about Bitcoin, they were actually also trying to remove, I think it's one of those bullet points. They were trying to remove the financial harm that was possible in a drug transaction. So if you go on the street corner, buy some pot from somebody, there's a chance that the person actually steals your money, right? If you're using an online marketplace like Silk Road, they're mitigating what is essentially a transaction risk, right? And they're doing that by providing an escrow system. And they're making money out of this because they're essentially, getting some money in exchange for that service that they provide. Much like eBay is getting 6 or 7%, Silk Road was taking 7 to 10%, depending on the size of the transaction. Another thing that was very interesting is that another way they were making money was by providing hedging services. So we've seen on one of the previous slides that Bitcoin is actually a pretty volatile currency. And if you're running, an e-commerce store, you don't want to transact in Zimbabwean currency, for instance, because it's too volatile. Same thing with Bitcoin. It's actually not that great. If I'm selling you an item today for, let's say that I want to sell it for about $600, I'm telling you it's 1 Bitcoin. Something happens, tomorrow the value of the Bitcoin is $300, and that's the time at which I'm paid, well, I just lost quite a lot of money. So Silk Road was actually addressing this for people who were interested by providing hedging services, which essentially would hold the price fixed in your original currency, in US dollars, modulo, some fee, which I forget what it was, but it was about 6-7%. So they were here mitigating a different type of risk, which is the market risk. And so essentially what Silk Road was, again, it was mostly a financial services institution that was, people were selling pot on it, but they could have been selling anything else. The same business model could have applied. And so what is interesting to me is that if you go back to what Joe was discussing in his talk, Bitcoin was designed to be completely decentralized, right? You don't want to have any concentration of power anywhere. And through the example of something like Silk Road and others, we've seen that there is actually a concentration. Silk Road was, at the time, a very large marketplace. People were actually using it also as a bank. So instead of keeping money on their computers, people were putting money in their Silk Road wallets and just leaving it there, right? Because it was easier than having to redo a whole transaction every time they wanted to purchase something. So they were using it as an intermediary. And of course, what happened when the FBI actually managed to seize Silk Road, all of that money disappeared, right? It was gone. If you had 10 Bitcoin on the Silk Road, you can go to the Southern District of New York and try to get them back, but I don't think you're going to be very successful. So that introduced a different type of risk, which is the counterparty risk. And this is something that is actually quite a big problem in Bitcoin right now. There is actually quite a large concentration in several entities. There's a few online wallet services that actually concentrate quite a lot of wealth. There's a few exchanges that concentrate also a lot of wealth. The recent example of Mt. Gox we are talking about quite a lot of money that kind of vanished, but they're not the only one. We did this study last year. A bunch of exchanges have been fading, and with them, typically quite a lot of coins were lost. There's other concentration points. Maybe some of my colleagues will talk more about them, but you can think also of mining pools as another place where there's quite a lot of concentration. So the point that I want to make is that we have this wonderful system that was designed. From a technological standpoint, it's really nice because it's all decentralized and it's you're getting a lot of resilience from the decentralization, but organically, it's converging to something where there's, again, some concentration. Concentration is good when you're looking for efficiency. It's not so good when you're looking for resilience. Decentralization buys you resilience. So we're kind of navigating this trade-off, and we think that it's useful to think of it in terms of those different risks. I haven't even talked about operational risk much, and I'll let others discuss this, but I wanted to make this point that again, you have a system that is by design very decentralized, organically is kind of converging to something that is more centralized, and that is alleviating some risks, but providing some other risks.
Great, thank you very much. Reiner?
Yeah, good morning, everyone. So we put up this little slide in the background to map part of Joe's elephant so that those who are not super familiar with all the types of risk that we have in traditional financial markets, and this is like a selection of what is relevant in Bitcoin. And when we are talking about Bitcoin policy and economics, then it's mainly about managing these risks for society at large or for the Bitcoin economy. To do this, I would like to start with reflecting what are the justifications for any kind of policy intervention regulation in the traditional financial sectors. And there are essentially three reasons. The first reason is price stability. So this is what monetary policy is about, sometimes also combined with a little bit of economic stimulus, and there are huge debates about that. And this is where the central bank as a typical regulator steps in to set certain rates and get some transmission mechanism to control the increase of the monetary base. All that is kind of pre-programmed in Bitcoin. We have seen on Joe's slides that there are some parameters fixed. We have this digressive function of new money creation or minting. And so essentially, the monetary policy for Bitcoin is made, and the Bitcoin economy just has to cope or to deal with it. So there is no real way of thinking about the need or even a possibility of regulation. The second control point for regulation is when it comes to consumer protection in the sense of protecting consumers from incompetent intermediaries. We just had this example with the failing exchanges. And we also see this in the traditional banking sector. But in the traditional banking sector, the main worry for banking supervision and essentially regulation is not a risk listed on this slide. Because typical banks are credit institutions, so they lend and they have this credit risk. In Bitcoin, almost everything is deposit-based. Of course, one can think about bonds using the scripting language in a very advanced fashion, but so far what we see is essentially deposits by customers into exchanges or other intermediaries, like wallet providers. And so regulators could see a need to protect these uninformed, in that sense, it's always the motivation of consumer protection is information asymmetries, to protect these consumers from incompetent operators. And the main worry here is operational risk. This is exactly the term that is also used in banking supervision, but in banking supervision it is way down the priority list after credit risk and several other risks. Here, operational risk is the main concern. And the third control point for intervention is essentially the fight of criminal activity. Typically when it happens in the financial system, it comes down to money laundering and financing of terrorism. And for that we have, of course, as it harms society at large, we have kind of a justification for potential regulation. How is it done in the offline banking system? I think a basic pillar of this regulation offline is the so-called know your customer principle. So it essentially mandates all the intermediaries to know the identities of whom they are dealing with. And behind that is a complicated and a little bit obscure system of blacklisting and sanction listing that would essentially trigger alarms and stop transfers. In the Bitcoin economy or in the Bitcoin ecosystem, as we've seen in Joe's talk, this is not directly possible because we have pseudonymous account numbers. It is very easy for people to create new accounts that are not directly linked to their identities. By contrast, we have complete information over all transactions. Everybody has this information. So that suggests that if one wants to implement some kind of anti-money laundering regulation, one should mandate not an enforcement via the know your customer principle based on identities, simply because we can't rely on identities, but rather on transaction prefixes. So you look at the history of transactions or beginning of a history of transactions, and if you know that this transaction resulted from, say, a criminal act, be it a fraud, be it extortion, and so on, then those parties who exchange Bitcoin for some real product or service or another real currency could potentially be mandated to obey certain restrictions, to report it or to stop that transaction. Of course, this is possible as it's a kind of overlay, again using Joe's terminology of changes to the Bitcoin system. That means it is even hard to avoid that it's happening at least in some places of the world. Bitcoin is just designed in such a way that transaction histories are public and they are identifiable, so people can attach information and make conditional decisions on that. But what does it actually mean? First of all, it projects some government power into the decentralized system. Second, and I think this is the biggest worry, it threatens the idea of fungibility. Fungibility is a property of money that essentially means every $1 note is worth exactly the same. Now with Bitcoin, as every Bitcoin has a different transaction history, you could price it differently. For example, I could value very much the Bitcoin that Joe used to buy his Porsche, just because he's going to be a very famous person in a couple of years. On the downside, I could also value a coin-based transaction, so one that comes directly from the minting process, much more than, say, a transaction that has a longer history, because the longer history means that there's a higher risk that it was potentially involved in some kind of criminal activity, and as a result, it could be blacklisted while I'm holding it. And that, of course, reduces the value of that coin. So this is kind of a very controversial issue. The Bitcoin system as a platform allows it, and it is a potential starting point or control point for regulation, in particular when it comes to fighting financial crime. But the downsides are obviously that the very notion of money of Bitcoin as a unit of account, which is one of the big functions that money should serve, alongside the medium of exchange and the store of value, is compromised. And so Bitcoin itself, if regulation using blacklisting becomes prevalent, may lose or may cease to be a currency as we think of a currency. Thank you very much.
Thanks. Sarah?
Sure. So I want to basically pick up on the 2 points of my previous panelists. So first, I really want to confirm what Nicholas said about centralization. So, we've talked about, Bitcoin as a decentralized currency, and already in Joe's talk, we saw cases where maybe some facets of it, namely mining, are increasingly not decentralized. They're in the hands of some very powerful mining pools. And similarly with the storage of Bitcoins and with where Bitcoins are physically sitting and physically flowing through, one of the observations we made when doing our research was really that exchanges, moving money into and out of the Bitcoin economy is increasingly centralized as well. So, everyone has probably read stories about using sites like Local Bitcoins to go meet someone in a park and transact that way. They give you cash and you give them Bitcoins. But the reality is that at scale, the vast majority of Bitcoins that are being traded for fiat currencies like dollars are going through not even just exchanges in general, but through a fairly small handful of exchanges. And, fairly unsurprisingly, I would say these exchanges have a lot of incentive to implement, strong know your customer policies. We saw that when Mt. Gox, I guess a year and a half ago, didn't properly register with the new FinCEN guidelines, that a lot of their funds got seized. So, even for overseas exchanges, there are ways that governments can still react. And so, maybe unsurprisingly, these exchanges have really been the focus of a lot of attention recently, both in terms of points of failure, like the infamous Mt. Gox sort of implosion, but also in terms of places that new regulations might be implemented. So essentially, one of the things that we did as part of our research was figure out how easy it was to track different flows of Bitcoins, right? So you might argue that, well, even if I figure out who you are at the point that you exchange your Bitcoins, if I can't tell what you did before that, then it doesn't matter. All I know is that you're exchanging some Bitcoins for some fiat currency, right? So this is back to the every dollar is the same. I can only see what you're doing. But in fact, we really observed that even within the Bitcoin economy, there were very fairly straightforward, easy ways to start peeling back some of that anonymity as well. And so this kind of has this natural analog in what's been mentioned, I think, a few times, namely blacklists, right? So blacklists are a current very controversial issue in the Bitcoin economy. I think, there are some, the Bitcoin community. I think there are some people who see the positive side of these blacklists. So, for example, if you are trying to legitimize Bitcoin and you want to remove this association with services like Silk Road and with, theft and extortion, then implementing some kind of blacklisting is a way to really weed out that activity from the legitimate activity, no pun intended, but separate that from the more legitimate activity of just honest users who want to use Bitcoin. And then, of course, on the other hand, there's this natural extension that maybe we don't all trust these governments the way we used to, that they can essentially start sanctioning addresses and saying that this is the address we want you to use, this is how you're going to use Bitcoin, and anything else would become more difficult to transact with. So, I understand the controversy surrounding it. I'm happy to debate it with my panelists or with myself. I'm quite conflicted on the issue. But I do think that, one important thing to pick up on that Reiner said is that blacklists are an overlay. So essentially what our research did was show that with a fairly small amount of effort, you can start to make your own blacklist. So what we currently have at UC San Diego is what could be likened to a blacklist. So at last count, before Silk Road was shut down, we had identified over 300,000 Bitcoin addresses that were associated with Silk Road, in addition to, thousands and hundreds of thousands of other addresses that were associated with perfectly legitimate users and services. So I think it is important to, I guess, get ahead of the issue. Whether you feel that it's a good thing or a bad thing to start implementing these kinds of regulations and to start folding in this policy, that it's possible to do it today, and there's not much of a reason to expect that it won't happen or isn't already happening. So coming up with ways to either allow these lists or some implementation to preserve the privacy of honest users, or if you are an honest user who's concerned about your privacy, start changing the way you transact using Bitcoin, using some of these mix services or using things like CoinJoin. But I think these are issues that we really need to address before they get decided for us.
Thanks. So we're going to open it up to the floor for questions in a few minutes, but let me just invite those who are watching on the live stream to you can send any questions via Twitter with the hashtag PrincetonBTC. Thanks. So I'd like to ask a couple questions first to get things started to the panelists. And one is the question of to what extent you think it's happening or is likely to happen that a governance structure is emerging or will emerge for Bitcoin. We've certainly seen this with some open source projects as they become more central to the functioning of, say, of the web. Projects like Apache and so on start to transition from informal sort of consensus governance among those who care to a structure that's more formalized, where there are processes and committees and so on. Do you think Bitcoin will tend to evolve in the direction of, if not constitutional government, at least a sort of more formalized structure for decision making? Or will it be able to resist that? And if so, why?
I guess I can try to start addressing this question. I think that what we've seen, what we were discussing, is this centralization of some of the activities, such as mining, such as exchanging money into currency to and from Bitcoin. So whenever you have this sort of consolidation, I think that immediately there is some power that comes with the actors of that consolidation. So for instance, when Joe was presenting this graph about mining pools, the fact that Ghash was on your graph at, I think, 35% or so, it's maybe a little bit less right now, there is some serious worries about how to control this, because if they manage to get even more, they could, for instance, decide to outlaw certain types of transactions that they don't like. And so I think that, yes, I mean, organically, this is what it seems to be tending to. Is this something that there's going to be a lot of pushback on or not? I don't know, but so far we've seen some sort of concentration, yes.
So one thing that I'd say is, we've seen in the past that if the government doesn't like cryptocurrencies like eGold or like Liberty Reserve, that they actually have made moves to shut these currencies down. What I will say about Bitcoin that I think makes it distinct is that even though the current default behavior is the sort of organic development has been to make it fairly centralized in some ways. It's not inherently central. And in fact, Bitcoin is still a decentralized protocol. So I think, and we've also seen, again, in Joe's talk, we saw how many altcoins there are. I think there is this sense that Bitcoin's a little more elusive, and that if the government starts implementing, blacklisting and regulations that people in the Bitcoin community don't disagree with, they can all collectively decide, we're going to go do zero cash now, and or we're going to go start up Freedom Coin and get rid of these regulations, so that it is, as long as there's a core group of people who believe in this, it is a little more elusive to actually, decisively regulate or shut down Bitcoin.
Yeah, I mean, there's little to add. Even if there are developing governance structures, and in particular in support groups lobbying towards policymakers in accepting or at least clarifying the legal basis for the use of Bitcoin, and I see a lot happening there all in different countries, in particular in Europe, where I'm from. This is still detached from who has the actual power in the Bitcoin network. So if a transaction needs to be reversed, or if something needs to be fixed, like a major fork in the chain that we had a year ago, then it's essentially about the interpersonal connections between the operators of the big mining pools, and they are not like formally embedded in these governance structures that we typically think when we are talking about governance structures.
Thanks. Let me ask another question about the role of government, right? Many of these discussions are framed as in a way that says that Bitcoin has operated independently of government, and now various government agencies are preparing to wade in. What are they going to do? How will Bitcoin react? Let me ask what you think government should do. What do you think is the right role for government in this space? In an area that touches the economy and perhaps someday the mass of ordinary consumers, what do you think government should be doing? What could government do to be helpful in this space? Or is the answer no?
I have a wish list, yes. I mean, first of all, every regulation should really understand what Bitcoin is about. I mean, it is very difficult to just use analogies from the offline financial sector. I think this is kind of the key message. So I don't know how many representatives of government are here in this room today. I would wish that they attend and get educated by Joe's talk, to the extent that, I mean, I'm not saying they don't know anything so far, so it depends a little bit on the country. I mean, you see decisions that are very well thought out and other decisions that appear a little bit like, and they are trying to regulate something that they don't fully understand. That's the first message. The second message is, yes, we need a balance between law enforcement stability, potentially also monetary stability, which is kind of out of the scope of Bitcoin, and freedom of innovation and freedom of exchange in a way that it's even unobservable, so connected to the right of financial privacy. And finding the right balance there in a context that involves technology, incentives, and of course law internationally is really, really a hard problem. So there's going to be a lot of kind of regulatory arbitrage also between like different countries adopting different policies. So kind of the second message to governments is, in finding this balance, try to coordinate internationally. So we are building a currency, or let's say a payment system, a little bit more prudent, for the internet, for the global internet. So it doesn't make sense to move into one direction in one single jurisdiction. Okay, there's a little bit more, but I think these are the two most important points from my side, and I guess you have something to add.
Thanks, Art. I just want to build up on Rainer's last point. This type of new technology, be it Bitcoin or even the internet as a whole, is something that is extremely new if you think about it. I mean, Bitcoin, it's a couple of years old. The internet as a whole, okay, 50 years old, but with the web just 20. And these are constructs, engineering constructs, basically, that do not map well with these centuries of government structure that we've built, precisely because they're basically borderless. And there's been a large number of attempts trying, for instance, to regulate cybercrime on the internet, trying to find ways of catching people and cooperating. There's an international convention on cybercrime. It's really hard to work it out. I mean, it's, even when there is regulation, it's really hard to enforce regulations because basically you have a very, very distributed environment, and criminals and other people who want to, break the law manage to find loopholes fairly easily because it's just, so distributed. So in terms of what should government do, I don't know if that's necessarily the way I would phrase the question, but more maybe what could government do? And I don't know the answer to that yet. One thing that I think, going back to Rainer's first point, is quite necessary is perhaps to adopt, and I say this very candidly, adopt kind of the position that the US government has been adopting so far with respect to Bitcoin, which is just let's wait and see, and let's see if there are some innovations that are actually valuable come out of this, and let's not over-regulate right away lest we kill potential innovations. I think that's a prudent view, and I'm hoping that they would continue doing that.
So I don't have too much to add, but I guess, one role I see as government providing is providing the right laws in place so that crimes surrounding Bitcoin and other cryptocurrencies can be effectively prosecuted. So I know this was discussed at the Senate committee hearing I went to back in November, that, here in the US, at least, parts of the Bank Secrecy Act and certain sections of the Patriot Act do seem to be sufficient for prosecuting these kinds of crimes involving cryptocurrencies. But again, acknowledging that Bitcoin is an international, global currency, and so definitely requiring some kind of international cooperation seems useful. And then I guess finally, maybe on a smaller scale, I get contacted by a lot of people whose Bitcoins have been stolen, and they go to their local police, and I think their local police kind of laugh at them, and maybe they'll let them file a report, but it's largely symbolic. So providing some kind of body that might be able to help people or advise people, and I'm not sure this is necessarily the role of government, but some sort of body that can help people resolve these disputes.
Great. Let's open it up to questions from the floor. I'm going to start with the guy who didn't ask before.
Hi, thank you. My name is David Bornstein. I'm a graduate student here in computational biology. And my question, I'm very interested in algorithmic trading, particularly of Bitcoin futures. And a lot of algorithmic trading strategies have been regulated or banned because they can destabilize markets. They've required throttling, various things like that. Is this something that you think would be required either for something for a government to do or for developers to introduce overlays to prevent, or is this something that you think could ultimately be prevented just by additional strategies if that could emerge organically?
Okay, so I take this as a very visionary question because right now, there are futures markets and everything is kind of thought out, but as far as I know, nothing is really liquid to the extent that, we can compare it to algorithmic trading at Wall Street. What I think when I think about it, there is one natural barrier, at least to executing a lot of transactions in very short time, because we have currently this fixed block size and a non-negligible transaction fee. Which is something that at least algorithmic traders try to get rid of with special contracts with the intermediaries. When we are talking about transactions that do not happen in the blockchain, so for example between big intermediaries, which is kind of against the spirit of Bitcoin, I want to say, then of course we can run into the similar issues that you can have a threat of all kinds of algorithmic trading, and here I don't focus too much on what they actually do, but also about the information advantage that they extract. So algorithmic traders are particularly good because they get additional information. Cryptologists would call it side channel attacks against exchanges. And so if this happens, then potentially a regulator who anyways regulates an exchange would have to step in and implement more or less the same laws. I don't know the regulation, in particular in the US, well enough to say whether existing laws apply and are sufficient, but I can very well see a need to adjust it accordingly.
So maybe I've got a little bit more, just to add on to what Rainer was saying, maybe I've got a little bit more hands-off view of this. I think that Bitcoin is a wonderful sandbox, actually, that we can use and just let people do whatever they want, and then if we observe that there are abuses, then we can try to react to them.
Yeah, just one thing to add is, beyond futures market, I'd say the trading market for Bitcoin is currently very thin, relative to most other markets. So if you look, there are documented cases of abuses. For example, when Mt. Gox was really in the picture, the potential for arbitrage was enormous. A huge delta, and I'm almost positive that this was happening with high frequency. So I think it's maybe there's a lot of other issues that need to be sorted out.
And so there are many different concerns about the future of Bitcoin, and I guess one of them is, so there's this paper by EL and Gonzira from Cornell, and they show that essentially majority is not enough. Like you need, if let's say one of the mining pools exceed like 1/4 or 1/4 of the or 1/3 of the computational resource, then Bitcoin will cease to be a decentralized system, and the current security properties will cease to hold. So I was just wondering, what do you think of this? Is it likely that this thing will, gradually become more centralized and the mining pool will become bigger and bigger, and someday this thing will kind of break because of that? Yeah, thanks.
Yeah. So yeah, I think there might be another panel that could speak more to this maybe, but for now I will just say, the incentives seem a little misaligned. So we've actually seen examples, some of people in the audience could say this better than me, but where mining pools have started to approach that mark and have intentionally scaled back. So, but yeah.
Or let's take it a little bit more general so that it fits the economics panel. There is this conception that Bitcoin is designed in a very nice fashion such that it's incentive compatible, but there are different shades of gray of the notion of incentive compatibility. What Bitcoin is, it is approximately incentive compatible at best in many different respects, be it the mining protocol, be it the flooding, peer-to-peer flooding algorithm, be it the formation of blocks. So what we see if now game theorists and computer scientists look at things more closely, then they find, okay, you can always play and gain in this little difference between the approximation and the actual implementation of the protocol. And this is an interesting research field, and it kind of connects to what Niklas said, that we have a great playground to test economic theories.
Hi, I'm Jerry Breeder from George Mason. Two short questions. One is, if a government wanted to employ the blacklisting approach and require that intermediaries observe the blacklist, which intermediaries would be the best targets? Would it be exchanges? Would it be the miners themselves? Who would that be? And secondly, following that approach, you have hundreds of jurisdictions around the world who would want to put certain addresses on that blacklist. Could you talk about the possibility of that kind of enforcement?
So I think that your second question was the answer to the first question. I think that governments, plural, would try to exert pressure on intermediaries that they can control. So for instance, if you're the Byzantine government and you've got a Byzantine mining pool, that's where you're going to try to exert pressure just because you have jurisdiction over it.
And what is important to add, sometimes it does not even matter where you exert the pressure because by extension it translates up in the transaction history. So for example, if you only target the exchanges, then everybody who is going to convert a payment into other currency at some point in time has to anticipate that potentially it's going to be blacklisted, so he has to implement some kind of risk scoring, and so essentially the whole fungibility breaks down as soon as you do it at one point, and of course you do it where you can.
So I'd say the effect might be the same of targeting mining pools and exchanges, but I'd expect to see governments target exchanges more simply because those exchanges have an existing relationship with FinCEN. And the other thing, I guess, is that, blacklisting, I think, when I think of blacklisting, I think of sort of rejecting the Bitcoins at the door, let's say. I try to deposit the Bitcoins and they just sort of throw them away. I think the term that's been coined is red listing, where the exchange actually lets the deposit go through, but then what they do is just make a note of it, and then they do the standard financial thing where once it gets over a certain threshold, like typically 10K, they file a suspicious activity report with FinCEN. So I might expect to see exchanges be the target, although again, it's based on relationships, and if you can get a mining pool to start rejecting transactions, then that might be one way to go as well.
Hi, my name is Max Hartman from Columbia University. I have a question mainly for Sarah about mixing services. I think mixing services are really important, and I'm just wondering if you had any more detailed thoughts about the differences between CoinJoin style trustless mixing, as blockchain.info calls it, or if you think that a bitmixer.io style shared wallet where the chain is completely broken is better or worse in ways, or if you have any other thoughts about other ways that you think mixing services should be employed differently by exchanges or by mining pools or any other Bitcoin actors.
So there are probably some people right in the second row who can answer this question much better than I can. But I guess one thing I'll say is, it's very clear to me after interacting with them that sort of central mixes where, you send them your Bitcoins and they promise they'll send you back kind of different Bitcoins are absolutely problematic doesn't even begin to cover it. So, there's the promise that they'll send you any Bitcoins, which is often not true. We had, I think, 10 Bitcoins stolen by BitMix, which I don't think is operating. And then the analog is that the promise is that those Bitcoins will be cleaned. So we had services, and I think I saw, that they'll send you back your own Bitcoins. Basically, they don't have any other customers, is my sense. So I think centralized mixing is clearly a disaster, and I wouldn't use it. As to the different subtle approaches, of coin join versus the shared wallet approach, I honestly really can't speak to that. I haven't seen enough, they haven't been around in use long enough to really observe the differences.
Yeah, I wanted to build on Elaine's question a little bit and ask it more as a policy question. I think this is going to be a little unusual, but suppose that our government or some government decided that it was in the best interests of the whole global or national cybersecurity to have a very strong, decentralized, robust financial platform, any platform. Is there anything that regulators could do to defend the decentralization of Bitcoin? For example, I don't know how effective trying to outlaw large 51% pools could be, and it seems just totally unlikely that they would do that to me, but is that possible, and how could that work?
I mean, essentially what you could do is you require antitrust laws to be applied to mining pools and exchanges.
Yeah. It's basically, that's basically how you would do it. Would they do it? Would they even understand the problem? I'm not sure. But
You're on television. You're on television.
My question is, can Bitcoin ever exist as a standalone currency the way the dollar or the euro or the yen can? They can exist without Bitcoin. Can Bitcoin exist without the dollar?
If there is no dollar and there is no euro and we still want a kind of medium of exchange and money, then of course we have to resort to Bitcoin. So Bitcoin as a system, I call it a currency system intentionally, I don't call it a currency. It has the properties needed, maybe apart from anonymity, to fulfill all the functions of money. But
you just said it can't be a unit of account.
This is connected to anonymity. This is why I made this little remark about anonymity. Suppose we use mixing by default, or suppose we use one of the extensions that have been just mentioned there, how you build it in an anonymous fashion. Then it could become a currency. But what is important for a currency, and here we have to distinguish between the legal notion of a currency and the economic notion of a currency. For the economic notion of a currency, it means the three functions are fulfilled. So not the potential to fulfill it, but they are fulfilled. And what is currently not fulfilled, it is not a unit of account, because even those people who are paid in Bitcoin, they get their salary in Bitcoin, they do not negotiate it in Bitcoin. So essentially you refer to an external unit of account. And because it exists, and if it was not there, so it's entirely counterfactual and hypothetical, Bitcoin had the potential to do that. To be a legal currency, no way, unless a state adopts it as the official money, because that is kind of the legal definition of a currency. It needs to be state-backed.
So the only thing I'll quickly add is that I think, the reason you'd kind of be crazy to price a good in Bitcoin or ask for a salary in Bitcoin is the volatility rather than the anonymity. So, if I price a good in, it costs 1 Bitcoin today, that can actually mean a very different thing in 2 weeks or even in a day. So I think currently the volatility, in my mind, is the biggest obstacle towards pricing things in Bitcoins. And then, of course, things like anonymity and fungibility would come into play, but that's maybe the primary.
So just to add very briefly to this, I think you're making a great point. As a building block, it's great, but you need other things to actually make it probably practical. Something to defeat the volatility, which is what I was talking about in Silk Road. You need essentially to rebuild some sort of financial system on top of it.
Hi. A follow-up question that's somewhat related. First, just to make an observation, an IPO came out on Tuesday of a company called Candy Crush, which is a little game that's played by people for advertising or some sort of other revenue source. Now, Candy Crush IPO'd at the exact same value as Bitcoin, $7.6 billion. It proceeded to drop 16 or 17% after IPO. Yet there's no screaming about should this be the end of games, of candy, of smartphones, of IPOs, of Wall Street, et cetera. So it is amazing to me that someone in the background cares so much about Bitcoin. And this is my follow-up question to that. Is it possible that the banking system and the monetary system itself is actually the entity that is corrupt, exclusionary, expensive, wealth deteriorating to most societies, and that Bitcoin is a response to this corruption? And I might add, and this will be my final point, every 40 years, the dollar massively changes its value. So leaving apart Argentina and Poland and Brazil and all the currencies that collapsed, Zimbabwe, the dollar, 1861 collapsed, 1896, a huge battle between silver and gold, 1933, gold standard adjusted dramatically, 1971 gold standard collapsed, and now 2009, 40 years later, a new currency is introduced. So I wish that there was a fourth panelist with a salt and pepper beard who's a colleague of Ed Felton's be here today, but I'll have to ask three computer scientists what their thoughts are on macroeconomics.
So one quick thing I want to mention, and actually I was having this discussion on the way over here, you were talking about the existing banking system is expensive and presumably proposing Bitcoin as an alternative. And I will say that, people tout Bitcoin as having low transaction fees and being flexible, but actually I will say using Bitcoin is quite expensive. If you factor in economically the risks you're taking, with your money, Bitcoin is really not particularly safe to use right now, both in terms of, the threat of thefts and the lack of good storage solutions and the lack of good people to hold your money. We've seen that you really can't trust anyone, and unless you're very, very technologically savvy, and even then, you might still store your Bitcoins in an unsafe manner. And so I think if you factor in the risks and the lack of government protection, any lack of consumer protection, we're actually talking about a fairly expensive endeavor as well. And you might argue that it could develop into something different, but I would say right now I would view Bitcoin as just as expensive, if not more so, than the existing financial institutions we have.
Hi. So do you think that anonymity will continue to be a key facet of Bitcoin as people start to use it for, I guess, more legitimate purposes?
Well, let's put it that way. It was anonymity, which, by the way, is not one of the key properties of Bitcoin itself, right? That's why we have zero coin and things like that. Pseudonymity is, but linking pseudonyms to identities is something that might be done in some cases. For instance, if you go to an exchange and get coins from there. I would say that the initial killer application is perhaps a bad word, but the initial developments in Bitcoin for marketplaces like Silk Road required this hard-to-link transactions. And so that's why, people build mixers and things like that. The first mixers, they were essentially used by people like Silk Road and folks like that. But they introduce potentially inefficiencies, right? I mean, if you're sending points through a mixer, you have to wait for them to come out. Sometimes they don't even come out at all. In any case, you have to pay fees and things like that. And I think this is also somewhat related to the previous question. What you have now is you have a way of essentially determining what is the level of quote-unquote security that you want to have, right? Do you want to have mixing? Do you want to have the possibility of maybe doing chargebacks? Well, you can do that in Bitcoin. So you need, in addition to that, you need an escrow service that gives you your coins back in case you've been fleeced. And all of this, as Sarah was mentioning, costs money. And I think that the answer to your question is basically, I think the market is going to drive, what's going to happen. Meaning, if there is a demand for people for those primitives, then you will see them, being developed. If there's no demand, the very bare building blocks of Bitcoin, which can be used, don't offer this kind of security guarantees, and so you wouldn't get them.
I have a very simple answer to that. In an open system, necessarily anonymity is the flip side of fungibility.
So you've talked about regulation a lot. Do you see regulation globally being driven by the state that is the most against Bitcoin or the state that is the most for it? Is it going to be a race to the top or a race to the bottom? In particular, I'm worried that even if most governments in the world come to some sort of regulatory acceptance of Bitcoin, if there's one particular state for whom Bitcoin seriously undermines state goals like capital controls, will that state find that it's cheaper to disrupt the entire network rather than try to regulate just their own citizens being able to interact with it?
Do you mean technical interruption or?
Yeah, like technical interruption style attacks, like they invest in enough mining hardware to destabilize the network, or sort of, more kind of, feather forking, like technical disruption, versus regulating if their own customers use it, trying to actually, or if their own citizens use it, trying to police that.
I don't know of any state, I guess, that views Bitcoin as enough of a threat currently to carry out what you're describing, essentially this takedown of the global Bitcoin network. So we've obviously already seen different nations taking different views on, how Bitcoin should be treated. I mean, we've seen that it's a commodity. We've seen that Bitcoin transactions are outlawed. I mean, whatever that translates to in practice. But I think these are more, stances that people aren't necessarily going to take further at this point.
No, I agree.
So we've heard a lot about Bitcoin. I wanted to also bring up, so initially there's this cryptographic eCash, like things that build on anonymous credential and stuff. So I just wanted to ask, what is this big deal about the decentralized thing now with the Bitcoin thing? What role will like cryptography eCash take, right? Because like there are efforts in Europe that's trying to deploy anonymous credentials for like paying train tickets and stuff. Yeah. So do you think Bitcoin is just going to take over the world, or there's some scenarios where we actually need something like cryptography eCash?
Yeah, I think that is a very good question. And so just to bring everybody on the page, I mean, Joe mentioned it at the beginning, but essentially the difference between the 1980s ideas is that David Jones' anonymous credentials was that you realize eCash by having a bank but making this bank blind. And Bitcoin essentially says, let's get rid of the bank, but now everybody can watch. And so they are two completely different concepts. And in my view, they complement each other. So you can, and one scenario is that Bitcoin is kind of a reserve currency that is also the unit of account on which you build kind of overlays of Chaumian tokens or these kind of anonymous credentials, which you can use then for end consumers. So we are not going to pay our coffee in 20 years by making an entry in the main blockchain, but rather by exchanging maybe even offline credentials that do not leave any records and are not traceable. And whenever like the intermediaries settle between them, or when we buy a home or a car, then it's going to be a main transaction and also subject to law enforcement and scrutiny. So this is a plausible scenario in my mind. Maybe I'm too visionary, but this is how I think things can work together very well.
I can't help but wonder if the opportunity is for Bitcoin to generate more trust and not to look for government policy to create trust. Given that's the basis of what Bitcoin is founded on, right? It decouples from existing governments. So I wonder if you could speak from an economic policy perspective as to Bitcoin's own role in generating and continuing on that mission to verify trusted transactions globally versus the thought of potentially relying on a government to come in and say, well, now you can trust it under these circumstances. So whether we think about blacklist, I wonder if the opportunity is to look at it in terms of a self-regulating green light list, almost as, the same way I think Apache was mentioned earlier. We look to humanizing platforms like Wikipedia, right? They've figured it out. The world as a whole accepts them. So I'm wondering, do you see a shift like that in a focus on enabling that type of, almost as a matter of public record, pursuing down the path of not privacy, but saying specifically, I am who I am, move away from pseudonyms to real names, and this is a trusted platform.
So I guess one thing I'll mention that Joe mentioned and we had a good discussion about yesterday is there was sort of an attempt of doing this in Bitcoin, and this is this notion of green addresses, right? So this is saying like, I'm this big financial institution, you can trust me that I'm not going to double spend, and you can trust that I have the funds to back this up. So the green addresses, I think, are still a great idea, but I think the the issue is, who can you really trust right now? So the two biggest green addresses I can think of belonged to Mt. Gox and belonged to InstaWallet, which suffered either a massive theft or it was an inside job. Who knows? So I think we're currently at a point where having a big, even having Coinbase right now, which I think of as fairly trustworthy, saying, "Oh, trust me." It's maybe okay in terms of this double spending risk, but when you try to bring this up, I think it's a question of just putting people forward who really are trustworthy, and I'd say that's the biggest obstacle right now.
Hi, I'm Manny Perez. I work in AML, anti-money laundering compliance, also associated with the legislature. But my concern is listening to the discussions about anonymity and literally hiding who we are. One of the problems is that the U.S. has made it a crime to deliberately try to hide yourself from financial reporting. It's called structuring. And I'm concerned that if we find solutions to just make sure we're anonymous, we might fall into a criminal act as individuals, which right now we're not doing. We're just using a system that has anonymity as one of its functions. So I'd like to know what you think about that. Thank you.
I think we have to clarify the notion between public and anonymous, because of course what this legislation also, I don't know it exactly, probably wants is you should not hide it from the government or from legitimate users. The problem with an open decentralized system is that you cannot tell the good guys apart from the bad guys. So essentially if something is not anonymous, it means it's visible for everybody. And I don't think there is regulation in the US that requires you to disclose all your financial transactions with everybody involved.
Right.
And so we are in this design space, and some constraints, or this design space is constrained somehow by the requirement or by the wish to have a decentralized open system, and so that essentially, gives us some room, but of course not everything is possible.
Robert Johnston, United Nations Department of Economic and Social Affairs. The question of trust was raised. I'm reminded of Warren Buffett's maxim in matters of money: trust, but verify. But I think also it was kind of alluded to that you have kind of an escalating factor here. You go almost to most any store in the US with a $20 bill. They may look at it twice, but you usually won't have a problem. You give them a 50, many of them don't even want it. You give them 100, they'll probably send you to the bank. You give them 1,000, they'll call the police. So, and at the same time, as we go up in our transactions, buying a car, buying a house, you have escalating levels of verification and checking and so on with quite elaborate apparatuses sometimes. So inevitably, that's part of the system.
We had exactly this discussion yesterday when we met some researchers about the future of or possible extension, and we thought about thresholds for identification. So like small transactions should be more or less anonymous, and the bigger the transactions are, the more identifiable it should be, or the easier it should be to identify. However, again, with the constraints of an open decentralized system where people can just launch Sybil attacks, that means just generating new identities, there are some strings attached, so it's not as easy as it seems.
Yeah, again, just to elaborate on this, I think that Bitcoin by itself probably doesn't solve that, but it's the way I view it is, as a toolbox. It gives you a tool, and then you can use it to build additional mechanisms on top of it. Perhaps some of them already exist, and maybe you're just reinventing some, components of the banking system, but you might have to do that for certain types of transactions.
I want to convey sort of a broad economic belief that's widely held by the Bitcoin community, and see if you think it has any merit. So like Joe asked and Sarah mentioned, the really large, maybe state actors who might try to just quash the currency straight on by buying mining power haven't seen it as enough of a threat. Maybe they will see it as more of a threat in the future, but by that time, maybe Bitcoin will become stronger because there will be so much more users and mining power. And the belief is that Bitcoin will keep pace with the level of interest anyone has in attacking it. Does that make any sense?
Well, let me just give one data point from which you cannot generalize. But I think that the main thing, the main publicity that Bitcoin got in 2011 was unfortunately when Silk Road, was presented to the public, so to speak, and some senators actually said, we definitely need to shut this thing down. It's very, very bad. At that time, it probably wouldn't have cost too much to actually run serious disruptions to the currency. And they didn't do it. And why? We don't know, but perhaps it's because there was, an idea that, okay, let's try to find ways, committing these types of acts, as opposed to just throwing everything, including this entire innovation that, could have some potential. So I think that there's been, a fairly cautious view of these things. I don't want to overgeneralize just from that one data point, but in general, governments do not like to take completely destructive measures if there is something that can be extracted for the greater good from that technology that is being deployed.
Yeah, and I'll just follow up and say, I hope that this doesn't happen, but I think, taking down the Bitcoin, like by controlling the mining, is something that I would probably view as less likely than, say, cutting off these choke points into and out of the system and just, great, you can mine all the Bitcoins you want, but, good luck turning them into fiat currency. So I would view that as the less technically challenging, less computationally expensive attack, and thus probably more likely.
Just a quick follow-up on that. In China, the game is sort of already on foot, right?
Yeah.
They shut down.
Yep.
You see China, they didn't shut it down.
They shut down renminbi deposits, which is,
and now, they've been doing cat and mouse with a couple of others. So the question is if they eventually get sick of this and say, let's attack the miners instead of, that's a one-off thing. And then
well, so what you're suggesting is basically a government deliberately attacking, Bitcoin infrastructure. It's possible. It's a strategy. I think I would think about it in terms of, like in any good game theory problem, is it in their best interest to do that? Is it the most efficient strategy, or are some alternative strategies like what Sarah was suggesting, basically giving you the same reward for a lot less investment? They're essentially, that's, I think, a good way of thinking about it. And I'm not sure that, taking down infrastructure is the most effective strategy.
Just two questions. One, I can't help think that we're doing a terrible disservice by continuing to discuss virtual currency as anonymous. That's my opinion is, and Sarah's proven that it's not anonymous. And I think anyone that thinks that, ask the people who are being indicted and receiving indictments from Silk Road. I think we need to discuss it, and to answer the question from the AML person, that we need to discuss it as a point of privacy. The whole sphere of my financial transaction shouldn't be public. I should have some privacy to those transactions, but in a government action, there should be some way through a subpoena or through law enforcement to do that. And the other thing is I keep hearing the government is the big bad boogeyman. Now, I don't see that either. My interaction with government is they're struggling to understand, the people that I've spoken with, they're struggling, and even Joe Manchin even is coming around if you're reading the recent news. They're struggling to understand this as we are. And I think what we need to do is, are we doing enough as a community or as an industry reaching out to them? You said, well, is there any government outside of the Secret Service and the FBI guys who might be here taking names? I don't know that, I'm glad to hear some are here. But I think we need to do a better job reaching out to them, and as you did and others did at the hearings, to educate them, because there's a huge, huge gap with education. So if you could just speak to those 2 points.
I think I cannot agree more. When we say the government is the bad guy, then a lot of questions were framed. If some government wants to, in particular Joe's, and that probably created that tone. I think in my first point of the wish list, I already said, okay, what we want is that the government understands the rules of this currency and finds a right and adaptive approach. And so I'm doing this in Europe, and these guys are doing this in the US, and at least in the major OECD countries, I guess we get the right persons in all kinds of government branches educated, be it monetary policies. I'm talking to the German FBI. I'm talking to the equivalent of the SEC. And so, yes, there is a lot of need for information, and I hope this is the way. I think this is the way to go, and I'm pretty confident that it's going this way.
So one just technical thing I'll add, I guess. I think what we showed is that the default behavior for Bitcoin is not particularly anonymous. I do think there are already existing ways, or even inherent in the protocol, there are ways to make yourself vastly more anonymous, and with existing things like CoinJoin and like some of the new trustless mixes, there are going to be ways to make Bitcoin significantly more anonymous going forward.
Yeah, I just wanted to say that I couldn't agree more with your point that, Bitcoin by itself is not anonymous. I mean, come on, there's the entire public ledger available for all to see, right? The question is whether or not it's easy to link transactions and whether or not people can build mechanisms on top of Bitcoin to do that. And I think that's actually two different, very separate questions. And so, yeah, I mean,
But if we feel our privacy is infringed upon, that's going to increase. Whereas if we can interact with governments in a way that we can meet both of our goals, then I think
that's exactly.
The government's already said that. They've said again and again that this is invaluable. This is a promising technology, and I think what they're issuing is warnings. They're issuing warnings saying, look, this is risky, this is experimental, but they're not shutting it down.
Exactly. Yes. This is exactly what we've seen for the most part, at least.
We need to change that conversation away from the us versus them.
No, absolutely.
How do we cooperate? How do we reach the goals that we both have?
I'll just say on the topic of shutting it down, so to speak, it's interesting how while Bitcoin itself hasn't been threatened with that, we have seen smaller alt currencies and so on do get shut down. And of course, the people who appear to be doing that are within the Bitcoin community themselves.
Yeah.
Comments on that?
I think it was a comment, so.
I guess I'm just curious what the point of Bitcoin is if it's just if it just becomes, like banking transfers, except for everything, where everything is totally transparent to governments. Because as we've seen with things like the NSA and Edward Snowden, if the government has a database of everyone's transactions, that's going to end up going to other governments. It's going to end up being stolen and sold to the mafia. Like this information doesn't stay where it's supposed to stay. And I guess I don't see the point of Bitcoin if it's just like super pervasive, well-documented PayPal. Like that sounds terrible. Like why would people be working on that? So.
Well, to some extent it already is. I mean, a little bit like that. Again, the mechanism of the blockchain is something that is a public ledger. But again, I mean, I'm going back to the points that I was making earlier. You should probably view Bitcoin as a set of nuts and bolts. What you build out of it is basically up to you. It's something that can help, innovation to some extent. Much like one parallel that is very frequently drawn is that of the internet itself. The internet itself is just a bunch of computers that are connected to each other. Create what you want on top of it. And so for a number of years, people were mostly using that for email and for simple file transfer. And then came, the World Wide Web, which no one was foreseeing necessarily in the 60s or early 70s when these networking mechanisms were built. And that turned out to be a really, really cool application. I think that, the type of applications that you might have in mind, you may be able to build them using something like Bitcoin. I don't know. But, it's something that fosters innovation.
Well, and it's competition to payment systems have extremely strong tendencies to concentration because you have a kind of two-sided market. So you want merchants and consumers to agree on the same system. And once this platform is established, they can extract monopoly rents. And you see this, it happens in the credit card markets. It happens in PayPal. I mean, recently I paid a conference fee in PayPal that charged like 3% to the organizer and kind of used a 5% reverse exchange rate for me. So it's like an 8% margin. And I guess Bitcoin can do better and eat into this kind of tax and use it for better purpose in the economy.
I'd like to ask a question myself next about the systemic risk that is identified on the slide here, right? The possibility of a bug in either in implementation or in design leading to trouble, right? So we've seen this discussion that perhaps the blockchain or perhaps the mining consensus mechanism is not as stable as originally thought. We saw the fork of the blockchain in March of 2012, was it?
Yeah.
2013.
Yeah.
Yes, which was quickly fixed, but required concerted action by the community. And we saw the transaction malleability, which was, I think it's fair to say, a wart in the design. which made it easier for people to make implementation errors in building their systems. So to what extent does Bitcoin have or need a concerted way of dealing with this? And is the decentralization of Bitcoin a disadvantage when it comes to coping with these sorts of risks?
I think that your parallel with open source projects was actually a very good one. It's a little bit the same thing as when you find, a bug in Linux or FreeBSD, and essentially, anybody can report that and can figure it out. But there's going to be more prominent members. Some of them are sitting here who actually have, commit bits, so to speak, and can actually modify the code base. So I think that organically, this type of governance structure, which is fairly dynamic, ends up working fairly well. I mean, as far as we can tell. You were giving the example of the blockchain fork. Actually, I think, from my perspective, that's a success because the problem was resolved fairly quickly, even though you have a technically completely decentralized infrastructure.
So suppose the system had been more decentralized than it in fact is. Would that fork problem have been resolvable as quickly and smoothly as it was?
Sorry, by decentralized, do you mean in terms of the core group of developers?
In terms of control, yes.
No miners, no mining pools. It was coordination of
miners
mining
as well.
pools. Yeah.
Yeah.
Along any dimension.
Okay.
Is anybody answering? I'm glad you mentioned a lot of examples, but my example for systemic risk is always Namecoin. Right, so in Namecoin there was an implementation bug that essentially allowed you to steal any domain name, and so that kind of took months to fix. Also, it has a decent community, and so this is a systemic risk that can only be prevented by diversity, and diversity in this respect does not mean just independent re-implementations, because that only captures implementation flaws, not necessarily design flaws or cryptographic flaw or cryptanalysis. So for that, we should, as a society, we should really value having multiple altcoins built on substantially different code base and built on ideally completely rewritten and built on completely different principles, maybe even different mathematical assumptions underlying their cryptography. This is kind of the engineering wish list for getting true resilience against, or robustness, not really resilience, robustness against systemic risk.
Yeah, and I'll just agree with mostly what Nicholas said, that, if 5+ years in, the worst thing we've really seen is this kind of like fork of the blockchain. I think we're in a pretty good place in terms of growing pains.
I'll just quickly point out that at a technical level, the March fork is an interesting example because it was only possible because of mining pool centralization.
Right. Yeah. Exactly. Yeah.
Additional questions? I can't believe this audience doesn't have anything to say. Ryan.
Do you think there's a way to have some kind of conditional updates in clients where people could vote and say, like, hey, if this particular if someone has a particular hard fork proposal that they want to push through, and X number of people are willing to accept it, then I will also download the update?
So, a hard fork would mean like a different difficulty level or a different. Sorry, I don't even know who was asking the question. Is that what you meant? A different difficulty level. So I don't see how those could coexist on the same blockchain.
No, what the idea is probably you want to have a voting process before you coordinate on a hard fork, for example. And then the question is, of course, what is people? You were mentioning people, but we don't have the people as a unit there. So essentially it's hash power. And it could be nice to have a kind of overlay to pre-check ideas before you roll them out. But I guess there are mechanisms that are...
Oh, wait, this does exist, right? In the Bitcoin improvement protocols.
Yeah.
For soft forky sort of things.
Yeah.
Okay.
There's even a question about whether democracy is a good decision mechanism.
Yeah. Okay, but I think it doesn't really belong into this panel, so maybe we defer it to another panel.
Any further questions?
Hand over there, this gentleman in the...
Yes.
Maybe there are some questions on mine too.
Yeah, we should check the Twitter account.
Yeah, just to come back a little bit to the issue of financial privacy, which looms pretty large here. I think there are two sides to the coin, and one or the other side tends to forget about it from the point of view of if you take the government's role, if you want to look at the government's role. On the one hand, we have the government trying to chase down all certain kinds of illegal activity, a la Silk Road. At the same time, we have a huge international financial apparatus which is set up to hide money in various places all over the world for tax avoidance, political unrest, all of these different kinds of issues. An apparatus which is extremely profitable to the financial sector, and governments poke at it around the edges, but they tend to support it very considerably. And I would hate to see Bitcoin fall into the government's grasp in terms of, if you've got lots and lots of money, by all means, we'll take it, we'll keep it private. If you're the little guy, then whatever we think you're up to, we'll come after you. So I don't know if you have any, it's not really a question, but you may have some thoughts on how, if there's we have the democratic ethos in internet, which has been pretty effective, actually, surprisingly so. And if some kind of, I don't know, financial freedom ethos can be promoted or is there in Bitcoin or the community of international currencies.
Well, I think that the absence of central control, there's not like a Bitcoin company, much like there was, for instance, a Liberty Reserve, which was, promptly taken down when people realized that they were mostly used for essentially illicit transactions. I think that the fact that there is this decentralization at the protocol level actually, helps in that sense, provide the type of thing that you're talking about, which is, resilience to this type of pressure. Now, the question is, you have this at the protocol level, but the system is also organically evolving into a system where there are, fairly strong intermediaries, fairly big intermediaries, and if pressure was applied to them, how would it evolve? Would we see a dissolution of big mining pools and everybody, going back to mining on their PCs? Would we see, the explosion of decentralized exchanges? I don't have the answer to that. All I know is that the protocol, is completely agnostic about it and could support it.
Yeah, again, just a short one, maybe a little bit more general. I don't think Bitcoin can fix all of the problems of the world, and a lot of these, what you call intentional hiding of financial assets happens in asset classes that are not exactly money, and so it's hard to put this into a digital realm. You just can't hash property in the Caribbean. You can't put this in you can't put this in the blockchain.
Yes, I'd like to first say that after some years in this community and seeing all those new technologies regarding anonymization, both in Bitcoin and both in new cryptocurrencies, I think the privacy will finally get to the masses like in transaction anonymization. So this is a historic moment where we can inspect all the blockchain. Probably this will not last forever. So I think legislation should focus on know your customer rules more than trying to blacklist or extract information from the transaction history. And I think the question is, what do you think the governments will do when transactions will be complete private?
Honestly, I don't. It's very hard to answer. Also, it's just to put things a little bit in a broader context. If you go talk to, I don't know if there are some agents from the DEA in the audience, but if you talk to them about Silk Road versus the international drug trade, they will tell you, well, it's a drop in the ocean compared to everything that is happening in cash, basically. So they still go after cash. So we could speculate. I don't know. I think that I would like to go back to one of the points I was making earlier, which is we should see Bitcoin as a sandbox where we can try things and actually use it for experimentation, use it for innovation, and see by experience what are the possible tensions that are arising from some of this experimentation, and then base our decisions on that. It's very hard to forecast, to foresee the type of application or innovative uses or criminal uses that can be made. People are very creative, and so speculating ahead of time is a little bit difficult, at least to me.
So you mentioned about sort of centralization of miners and how to, I guess, combat that or work against that. But do you have ideas of how to incentivize users from flocking to centralized banking to store their bitcoins, so to use sort of the traditional banking system to keep the storage of bitcoins decentralized on people's computers or on their smartphones or something like that?
Yeah, so I think that could be accomplished by deploying a more secure client that implements a lot of the things by default, and by educating users on, secure practices. And, even if someone hacks into their machine, can the client still help them defend against that? So I think that's a really important gap that we need to address right now.
So just one thing that I want to add to that. Think about it. I mean, securing your own PC is actually fairly hard. Even some of us who are computer security researchers have had malware installed on our computers. So can we, sometimes willingly, but sometimes not, so can we actually guarantee that people would have the required level of expertise to be able to do that? And I think that the answer is no. So what you want to do is to provide solutions that are as easy as possible for them to do this without having to worry about it. And maybe, that's a hardware chip. Maybe that's something else. Maybe, it's something that I cannot even think of right now. But you really need to make it completely usable to people, because just telling them, oh, you need to harden your machine and download those antivirus patches, forget about it.
It's like the banking sector.
Not going to happen, exactly.
So far we've seen lots of interest in Bitcoin from the technical side because it's interesting.
Yeah.
And from the financial side because there's lots of money to be made. What do you think, how do you think, what's the next step? What's going to get this to the masses, right? The most people in the world are not technical. Is it going to be putting a dog on the coin, or is it going to be something else?
Great question. It needs basically a very nice application, and for certain types of niche applications, it's, for instance, electronic commerce, online electronic commerce. It's shown to be quite interesting. People were interested in it because of its anonymity, and I'm putting quotes around it, properties, which are not that good, but that enabled a certain type of business. Happens to be completely illegal, but at least that was an application that showed that, given enough interest, given enough demand, it actually works. But what's going to be the next step, I don't know. I mean, I'm hoping that's, it's as if, to go back to the example I was giving earlier, it's as if it's 1991 and you're asking me, what's going to be the use for the internet? I wouldn't, well, first of all, I was way too young for any meaningful prediction, but I wouldn't have told you, oh, well, there's this thing called the hypertext protocol that's, going to actually be something extremely useful. We don't know. I mean, it's a bunch of building blocks that are here that can be used probably for very cool things. And I would say that I'm hoping that some people more creative than me can actually come up with.
So one thing I'll add also is that, Bitcoin might not come to the masses, and I think that's okay, right? I mean, it's not like everyone in the US is using Tor to browse the internet. I mean, it can remain a niche thing and still be a really valuable technology.
You mentioned wallet security. How do you see things like improvements in wallet security, improvements in, say, proof of solvency for exchanges to go prove that, yes, they really do have the funds, auditing, and so on? How do you see that changing the way that the Bitcoin community is talking to regulators in terms of things like blacklists for bad agents?
I think that what you're talking about is essentially basically the community coming up with a set of rules. You can have rules that are laws that you enact, social norms, or you can have code. I mean, code is basically just a set of rules. And the presence of those, rules in general is probably something that makes a dialogue perhaps easier with people that expect such rules to exist, because they're referring to systems that already have those rules in place.
So another thing, I guess I view the issues as kind of orthogonal, right? So what regulators so there is this issue of financial regulation, but the kind of blacklisting regulation isn't targeting exchanges who aren't actually solvent or, personal thefts. I mean, it's targeting things at a much higher scale, like sale of drugs, like money laundering. And so I view the issues as maybe somewhat orthogonal.
Yeah, but you definitely need some kind of audits whenever you try to, technical audits for operational security whenever you try to regulate intermediaries.
Just wondering really quickly if each of you have a favorite Bitcoin client, either desktop or mobile or online, and also if you have a favorite altcoin.
USB key stored in a physical vault.
Yeah, paper wallets.
Paper.
And how about the altcoins?
None.
Yeah.
No.
Okay, on that rousing note, I'm afraid we're out of time. I'd like to thank the panelists.